Welcome to Leaders in Lending. I'm your host, Jeff Keltner. This week's episode features my conversation with Raja Chakravorti. Raja is the head for mid-market financial institution engagement at Plaid. And I think it's a really fascinating discussion about what Plaid is doing with financial institutions. Prior to Plaid, Raja spent some time at Root and the InsurTech based in Columbus, at PayPal, and then in the more traditional banking world at Goldman Sachs and JP Morgan. It's really bringing a wide variety of perspectives on what these kind of technologies mean for FIs. We spent a lot of time delving into open banking, his perspective of what the opening up of data means, how you can give consumers more control over that data, but really I think how you can build domestic services and experiences on top of the open data, and how financial institutions really need to start thinking of themselves kind of like fintechs, not just as a furnisher of data into that ecosystem, but as a consumer of data to build interesting experiences, give better advice. A really interesting opportunity, I think, for FIs there. He's got some really interesting numbers from some surveys they've done about just how much the average American consumer is engaging with fintech, how frequently, and how valuable they find those relationships. So I think it's a really great exploration of some of the future of what interconnectivity among data systems means and how FIs ought to be thinking about engaging that ecosystem. Again, not just adding value to other partners, but how they can actually provide values to their consumers by interconnecting through these data mechanisms. I think so a lot of the future is going to look like this, and so it's worth thinking about how to position your institution up front to be ready to take advantage of the opportunities it represents. So please enjoy this conversation with Raja Chakravorti from Plaid. Raja, welcome to the podcast, and thanks for joining us. I appreciate you making the time.
Thanks so much for having me, Jeff. I'm super excited to be here.
Yeah, you guys have been a big partner of ours, and we think a super valuable service. So I was really excited to have you guys come on. But for the listeners who are less familiar, can you give us a quick background on Plaid and what Plaid does?
Yeah, so I like to baseline this in our mission at Plaid. So our mission is to democratize financial services through technology. And we do that by making it easy to securely connect people's banks to the apps they want to use. We built a developer-friendly platform that supports and connects over 12,000 financial institutions to over 5,500 digital financial services built on Plaid through APIs. The concept our solutions are built on is called open finance. And it's baseline on this principle that data supplied by and created on behalf of financial services customers are actually owned and controlled by those customers rather than the financial services providers. And our solutions really allow consumers to securely manage their money across financial institutions, apps, and services seamlessly so that people can lead healthier financial lives. In terms of history, we've been operating since 2013, and it's been really exciting to grow alongside our fintech partners like yourselves. At this point, hundreds of millions of people across North America and Europe have used Plaid to connect their accounts to the apps they want to use to move and manage their money, whether they know it or not. To dive into it, though, I think a major factor of this growth is certainly cased in the experiences we're all going through today. So we used to talk in fintech about this idea that the pandemic has accelerated digital roadmaps 5 years. And we are certainly seeing this important shift in how consumers are attempting to control their financial health. Last year, I think everyone kind of observed that mass acceleration of fintech usage. But this year, that acceleration, I think, has absolutely been confirmed. And we've seen these digital behaviors to manage money become permanent, even as things like bank branches start to slowly reopen. So we released a survey last quarter called the FinTech Effect in conjunction with a Harris poll. And there were a couple of really interesting stats on it. But the one that I love to kind of highlight is that the number of US consumers using fintech grew 30 points last year, from 58% to 88%. So if you think about, that,
50%, that's actually 50 points. That's huge.
It's actually higher than the number of people using social media. It's higher than the number of people using video streaming services. So like when you say, let's go ahead and Netflix and chill in the evening, during the daytime, these people are definitely fintech and actively managing. So it's quite prominent.
That's fascinating. I want to talk a little bit about your history with the financial institution side, because financial institutions have often been the source of data being drawn into apps. And there's been some history from like where you guys started, where you guys are at. Give me a little bit of your kind of journey and where you're at and the way you work with financial institutions as opposed to the way you work with like fintechs like us.
Yeah. So I'd say the relationship we've had with financial institutions has changed dramatically. over the history of Plaid. One of the important areas I think to highlight is actually oriented around Section 1033 of Dodd-Frank.
Okay.
So this might be a little detailed for some, but
I like
Dodd-Frank
wonky,
is
detailed stuff. Let's go
okay.
there.
Perfect. So Dodd-Frank effectively enabled an open banking rule to be made in the U.S. And the CFPB, the Consumer Financial Protection Bureau, and the
Mhm.
current Biden administration have actually made strides to make that rule into a law. And we're expecting that to happen sometime next year. And so what's super interesting is that where we were in terms of enabling financial data for financial institutions to flow into the fintech ecosystem, whereas there might have been some friction in that idea of whether or not we actually want to let go of that data, I think it's now largely accepted as an aspect of what's going to happen today.
Mm.
The question, though, is really how do you go ahead and do it? And so this is an area that I think has been really prevalent for Plaid over the last, call it 2 years, in terms of how we're
Mhm.
working with banks. Some banks are investing really heavily in their digital assets, right? They're building out new digital infrastructures
Mhm.
for either their own embedded services. We're also seeing some start to build out an API infrastructure for data sharing. And this is the area of partnership that Plaid actually has with FIs, is because we work with them to ensure that when they build out these mechanisms for data sharing, that they're able to connect into all of those experiences that their consumers want. And at the end of the
Mhm.
day, I think our focus is on consumers and ensuring that consumers have the best possible experience. And this is where I think we start to align really well with what banks' expectations are as they're kind of moving towards this digital future.
Mhm.
I think the reality, though, is that not every bank is at the same stage in their journey, right? You've got the big ones who have $12 billion to invest in, their next
I
year of
saw that number
digital
too
growth,
recently.
right? But then you have some who are just exploring how to do this, right? Some may not have the capital or people in place to take on this resource intensive build. They may have different motivations to participate. Like, for example, they might be participating because they're focusing on retaining account primacy and know that giving customers access to the apps they love and want to use is absolutely critical to that. By the way, within that same study that we showed, we actually saw a stat that said, I believe it was about 70% of consumers, if they were not able to connect to the fintech apps they wanted to use, might
Mhm.
actually take an action to migrate their underlying financial institution. I mean, that's
Wow.
dramatic, right? So,
It
so
is
that might
dramatic.
be like, yeah. So that might be a key driver. And so there's that, or perhaps it's just understanding that there's a regulatory environment that is absolutely shifting, and that these institutions want to be compliant. And those motivations tend to define prioritization as well. So one aspect might be around credential sharing. Okay,
Mhm.
um, if a if a if a financial institution knows they have to start doing this, but they're really worried about credentials being loose in the ecosystem
Yep.
and not being able to control it, they might want to prioritize how consumers are authenticating in apps. So they might prioritize getting what's called OAuth compliant,
Mhm.
or they might be interested in data security, right? So they might prioritize how their consumers actually authorize the use of data in apps. Or they might want to focus on data minimization, ensuring that whatever data is shared is like the absolute minimum viable amount needed for the use case and absolutely nothing more. And our key is that we're working with banks across all of these vectors. Some solutions we have from our platform make this easy as a small configuration change with really
Mhm.
minimal effort, or we could go do that whole full scale API build out to enable further benefits. And then I think the last component of this is we are on top and aligned with industry approaches to standardization like FDX and interoperable principles. So I think all of these products enable data access and enables consumers to be able to use Plaid-powered apps like Venmo, Coinbase,
Mhm.
SoFi, and more. But I think the other area that's evolved for financial institutions is actually helping them build out their own capabilities themselves and accelerating their roadmaps. Like we like to talk about this idea that that financial institutions are also fintechs. And I think we're certainly starting to see that. And I think this evolution on open finance is actually enabling financial institutions to understand that, hey, look, like it's not just this one-way flow of data where our data flows out and we are fighting against this. And man, that's
Mhm.
putting us, behind the wheel. but rather we actually may be able to participate in this bi-directional connectivity where we might not have been able to get this full picture of a consumer's finances, but now we can, because now we're plugged in and to understand, okay, well, actually, you know what? Maybe this consumer has been using Venmo as a proxy checking account for X period of time. And we might
Mm-hmm.
not never have had any purview into that. And so when we were starting to create products for them, let's say we have, our wealth management division, we're trying to understand, hey, what do their assets look like? And we want to provide them with incremental products. Well, that was never in scope. Now all of a sudden it is. And so there's this new kind of view in which financial institutions can actually also take advantage of that ecosystem data, which ultimately, and this goes back to consumer, benefits the consumer because their choice and ability to look for the best products is now facilitated no matter which direction you go. And in the end, we think that in the aggregate just benefits the ecosystem.
Yeah, I think it's a fascinating question that when I talk to banks and they think about open banking, not Plaid's, because I usually don't ask them about Plaid, but about the concept of open banking and the free flow of data based on a consumer's permission to different applications, places. There tends to be an initial reaction like, that's my data, it's super valuable, and I can't believe I have to flow it out to people where I'm losing my competitive edge. And I always kind of want to look at them and go, that also means you can now flow in data for all these people that might have come to you for one thing, and you now can understand the picture more fully. I'm curious how you see financial institutions kind of switching to that, receiver and utilizer of your kinds of services as opposed to just a data furnisher to a Venmo. Or it's easy to think of Plaid as how I connect my bank account to Venmo so I can pull money in and push money out, or Coinbase so I can go buy my Bitcoin or my Ethereum. Whatever it might be. But I think it's much more interesting to look at how can we use that data in other ways than just connecting an account and verifying ownership. And how can an FI take advantage of those services, not just to send out data on their consumers, but to consume information to improve the experiences of consumers. So I'm curious what you're kind of seeing on that front from various FIs you work with.
Yeah, it's. I think we're seeing just a tremendous amount of interest here. The point that you made, which I very much believe to be true, around what is. So there was this worry about, okay, well, data flows out. Now all of a sudden we're giving away our competitive advantage, or we've spent all of this time building out this trusted relationship with our consumers. Why do we just have to give it up into the ecosystem, right? We built that relationship, it's ours. In ways, I understand that viewpoint that maybe that's viewed as proprietary, information that is something that you want to build upon. And as that relationship grows with that consumer over time, if you think about the traditional arc of, bringing a consumer in, meeting them where they are today, over time, building out additional products, grow with them, have them be a loyal consumer, pass it down to their children, have their children become loyal consumers, and just see that whole thing continue to accelerate. I think that has been what has been very, very much changed as we started to see all of these different financial services pop up. I think the first aspect of this was really around, if you kind of look back on fintech history, I always, in full disclosure, I'm a PayPal alumni, but PayPal's peer-to-peer wallet, when it first came out, was a super novel concept in terms of it's a new way in which to quickly send money to their peers without necessarily having to verify through bank account and going through the rigmarole of hey, have to go through this, have multiple days of settlement, et cetera. It was actually seamless, right? And so that concept was kind of started through fintech. And we saw additional concepts starting through fintech that were very, very different than what financial institutions traditionally were offering. But generally speaking, it was actually providing a better consumer experience. But they were very much point solutions in time, and they were totally disparate. So people didn't necessarily have the ability to collapse all those services into one. And financial institutions probably were emboldened to say, okay, well, hey, look, maybe we can invest to build this thing ourselves. Or let me go ahead, every time I see a new use case, I'll start to build it. But the pace of innovation, I think, has been super powerful to watch, because as more and more services have started to be built by more and more fintechs, we're starting to see that actually consumers can benefit from using all of these different point services. But the key is, how do you actually collapse it down into an interoperable way? And so banks making the shift from this idea that, hey, look, let's try to own every use case of that consumer, to starting to understand that like we may not be best equipped to solve all of these different things because it's really hard to build all these new solutions, but instead create an embedded way in which we can work with them. I think that's been like a huge transition. The other point I'd want to make here is actually around this concept of facilitating a greater audience than perhaps the financial institution originally might have been able to do. One of the areas that I'm personally quite passionate about is what are the things that data can do for people who have sat kind of on the sides or outside the traditional financial ecosystem. So depending on the stats you look at, right, like there's a stat that says there's 45 million underbanked people in the United States. To contextualize that, like add up New York, LA, San Francisco, Chicago, and Dallas. That's 45 million people. So all the people there together, those are the people who are basically sitting outside of the traditional banking system. I mean, that's a massive, massive audience for which solutions just haven't been able to be built. But because of this focus on point solutions, fintechs have actually been able to build certain activities for them by starting to look at alternative data sources and have been willing to actually maybe look at different ways in which to categorize or underwrite how those people were actually getting those services. And that's created this positive momentum in terms of how banks are now actually able to look at those customers as well, right? Working with a data aggregator like Plaid, now you have access to all of these different resources to better classify, well, what is the actual risk on this person? Take, for example, a new immigrant to the United States, right? Like when you think about underwriting, one of the traditional factors people look at is FICO score. And FICO score is a good metric in that there isn't a better one out there traditionally.
I think there's better ones. We have better ones, but that's neither here nor there for this discussion.
Yeah, absolutely. But I think the point is like when you think about FICO score, like it's dependent on things like your employment history, whether or not you have existing credit, what is your education look like. There's all of these factors embedded in there that are going to immediately disadvantage new immigrants to the United States, even if they might have history sitting across borders. There's not a good system in which to connect that information. Now, does that mean that person is not worthy of a product that is going to be hyper curated to the needs there? Absolutely not. It's just how do you actually accumulate the data sources such that you positively impact that piece? And so taking all these things together, I think this is where we're starting to see the new use cases pop up and this kind of evolution in how financial institutions are actually addressing the use cases. And in fact, I think there's been some really current news around some things that have happened with banks starting to get rid of things like overdraft fees, which are absolutely positively impacting consumers because overdraft fees, if you look at them, can be considered predatory. They certainly hurt a lot of different people who are looking at them. But I think that sort of thing was prompted by some of this innovation that we see through fintech.
I think it's fascinating. It's fascinating conceptually. I'm really curious where you're seeing practical, like you gave an example here of like alternative underwriting based on maybe cash flow data in bank accounts that aren't yours that you could view through Plaid, or even like more fintech type services like a Venmo or something where you can see more transaction history underwrite. Are you seeing, like, we typically have used Plaid's data for both kind of some ID verification and some income verification, not so much underwriting but verification. Are there other areas where you see either fintechs or banks who could act like fintechs, really practically applying this kind of data? Because I feel like what you're really saying is there's a shift from having the data being the advantage to being good at using the data to do new and interesting things, right? That's the real advantage an institution has now, is and not just use your data, but use yours plus data that you now have access to that's not held within the institution. So I'm curious what those practical use cases are. If I were in the bank going, hey, I should be thinking about how I can do X, Y, Z. Is it really around underwriting? Is it around, better advisory services? Where are you seeing the most interesting use cases for this kind of connectivity and data?
Yeah, so I think there's for me, like if I was to think about trends, I think like credit for sure. We've just been talking about this, but this is a really exciting area for innovation. We're seeing tons of opportunity being built out in the space. I guess to like level set what that looks like traditionally, right? Third-party lenders basically have to go through this complete and exhaustive audit of each consumer's finances to assess their creditworthiness, right? It's time consuming, it's resource intensive for lenders. And it's resource intensive for consumers, by the way, and is also vulnerable to human error. it also provides this kind of incomplete picture of consumers' finances, like we talked about. Like, let's say you use an alternative checking source, like a PayPal account, for example, that might not be captured in underwriting. And so the way Plaid's trying to address this is through things like lending products. We've got assets, for example, to the point that you just made, verifying borrowers' data straight from the source, easier and faster income verification. And that full picture of a user's financial situation helps to speed up approvals with cash flow data, right?
Yep.
The key is that we're able to shorten the verification cycle while also increasing approvals. And so that the verification cycle is obviously super important because you're actually able to meet consumers in the moment, which is going to start to lend itself to some of the use cases where we're actually talking about where, well, we'll get into some of this future stuff in a minute, but the increased approvals thing, again, is I'm super passionate about because it just improves the way in which financial health is actually applied to the masses in a way that just was unprecedented. We've got a lot of examples of actual partners who we partner with in this space. There are institutions like Varo out there who use our products, ones like Branch, just different sorts of institutions that are kind of doing it. But I think it's actually super interesting to think about the use of lending products and how they're actually majority actually not being done at traditional financial institutions like you and I might actually consider. So take, for example, Quicken Loans is the biggest mortgage originator in the US, right? They're actually not a bank. And I think they have a goal of hitting 60% of mortgages originated in the US this year. Now, that seems like an insane number, but it's certainly couched in some level of reality that hey, we think we can get there. I think the actual stat is that 45% of consumer loans last year were not made by a bank. They're made by a non-bank lender who can give a better rate or give better service. And they're going, importantly, again, to this non or underbanked consumer in addition to kind of the traditional vectors as well. And so if you just look at that trend, it's certainly going to eclipse 50%. So that's I think a really really important way in which we're starting to see some of these changes actually apply in real time.
So you talked about what's coming. Tell me a little bit about, I know you guys have the kind of history of what you've done. I know that I've seen a couple of announcements recently. We're recording this in kind of late January, and it seems like there's a lot going on over there at Plaid. Tell me about kind of what's coming up next and what you guys have your eyes on for the future.
Yeah. So we've had two, I think, major announcements recently, which we were super excited about. The first one is that late last week, we announced an acquisition of a company called Cognito, which is an identity verification and compliance platform. Basically, know your customer, anti-money laundering, identity verification, and it's used by hundreds of companies today. What's really important for us is when we think about the arc of what Plaid has been able to do for an onboarding experience, we were able to do, I think, 2 out of the 3 factors really well before. The first was account connectivity. So connecting your bank and financial data to an app, right? So we've talked a lot about that use case. The second one is around account funding. So actually moving money into an application. So let's say, you're on Coinbase and you actually want to go ahead and move money from your bank to Coinbase and to then be able to convert it into crypto. You use that account funding sort of product. But the third is around identity verification. And this is kind of that third piece around the complete onboarding experience. We want to make sure that the onboarding process is secure and privacy aware while minimizing risk and fraud. And so as things are evolving, I think this will actually give us that additional leg. And to us, this is actually where we think Plaid has an opportunity to really help everybody flourish, is to create what we're calling the on-ramp to consumer financial services in a seamless and kind of magical way, where we're helping to facilitate that first magical moment when the consumer takes that first action within the fintech. So that was really huge for us. The second big announcement that we actually had yesterday is actually oriented around some of our most important principles. So data security, transparency, and control are a top priority for Plaid. Ultimately, everything we do is about empowering consumers. And so yesterday, we announced the launch of Plaid Portal, which is a first of its kind consumer privacy tool for people to
Hmm.
manage their financial connections all in one place. And why this was especially important for us is that we think it is a critical development for consumers who deserve transparency and control over their financial information. So with the launch of Plaid Portal, basically what happens is consumer can see, they can both see the types of data they've shared with apps. They can also control who has access to their financial data. So if a consumer so chooses, they can go ahead and disconnect financial accounts from apps and delete data within the Plaid systems right there. So an incredibly powerful tool, and is certainly at the starting point. Hopefully, I think for a lot more innovation in this space to come as well.
Yeah, I love this idea of giving consumers control over that information flow in real time. I'm curious how you expect consumer adoption to be, or what your thinking is on that front. Just because I know that often Plaid is like kind of almost a behind the scenes. I don't want to call you guys invisible, because I think you are visible, and there's terms of service I know that consumers see and agree to, and they understand what's going on. But you're not really a consumer. Like, people don't go to plaid.com to connect their Venmo to their bank. They go to Venmo and they type in the credentials through Plaid. And so I'm curious how you're thinking about the consumer awareness of this option, because it's, you have this interesting connectivity role, but I think it's really valuable as so many apps and banks are now connected through your service to give consumers a single place to control what all that is. And I know I certainly have set up way too many things that I probably connected when I was like, I'm going to try this app and see, it's no good. I delete it. But that connectivity is not necessarily removed because I didn't do that. And that control is, I think, really valuable. But I kind of have to be aware that that's what's going on to make it work.
Yeah, and for us, it's really interesting for us because I think this is where we see ourselves as sitting at the intersection between consumers, developers, and financial institutions, and facilitating the entire ecosystem. And so we actually believe this is a value add to our financial institution partners, right? So what were some of, if you think about like what were some of the objections perhaps that financial institutions traditionally had to participating in open banking or open finance? One was very much, probably number one for many institutions, around this idea that we lack control mechanisms, and consumers may not actually understand what they're opting into. We are actually stewards of the data that we have, right? Like, we believe that consumers trusted us to build out, to build this trusted relationship. And now this is all going into a place where consumers might do exactly what you just said, is they might sign up for some sort of application and like they forget they do it. And all of a sudden, there's another touch point that they weren't aware of or they forgot about. From our perspective, our ability to articulate this product to our financial institutions gives them an ability to actually talk about how participating in open finance is actually a controllable and secure mechanism for consumers. Like, we already see that consumers are participating, right? So I kind of quoted that stat about 9 out of 10 consumers are using fintech today. There's this a corollary stat that I thought was really powerful, is that it's almost like 50% or 48% of consumers are actually using fintech on a daily basis. So it's not just this idea of, okay, we're using it, and what is usage? Like, hey, let me go log in and check my online banking system once a month just to make sure like I haven't gotten some overdraft sort of issue. But rather, they're actually proactively engaging with it frequently. And so the ability to the dialogue has changed. The way consumers view their financial health has changed. It's become, with products like Venmo, where there's emojis and all of this, and there's been like the social overlay to it as well. Having the privacy mechanism under that is really, really important. The other thing I'll say, though, about financial institutions in this area is, particularly as you start thinking about mid-market, long-tail financial institutions, many credit unions, community banks that I talk to, well, they want to showcase themselves as innovative for their consumers as well, right? Oftentimes what we found, particularly through the pandemic, is that consumers have built really trusted relationships with some of these localized institutions who they feel really understand them, have met them in the moment. Maybe these consumers are owners of small businesses in the community, and they've been able to obtain lending devices from those institutions that others haven't. So they have this like really powerful connection point, and these institutions want to continue to innovate and provide those consumers with all the things they need. And now I quoted that stat about 7 out of 10 consumers have basically said if they don't have connectivity to their financial app, they might choose a different financial institution. So what you get is this idea that, well, some of those institutions may not be able to innovate necessarily themselves in terms of acquiring a new capability. But if they're able to showcase that they're connected to these fintech apps, you can think about it as like a hub and spoke model, that we are still the centralized hub where you control all of your finances, but you're deployed into these areas. But by the way, that consumer control can be operated through that hub. And the mechanism to do that is through this Plaid consumer privacy portal. Then that's a huge value add. And so I know that was a big arc to get to your question about how we're kind of getting out to consumers, but I think there's a few ways. But for us, we think it's one way majorly is to facilitate it through our existing partners.
Yeah, I think it's so true that the partners, the FIs, are going to love this capability for consumers to really have more direct control over what's connected where and over time, and to manage that, because it is like any innovative sector. Fintech has seen the blooming of 1,000 flowers, and then there will be a weeding out of the ones that don't work. And I certainly have signed up for stuff to say, oh, let's check out what this is, and then wasn't that good. I feel like every budgeting app I've ever tried falls into this category. I don't know why, but none of them seem to have really hit on. And then I go away and kind of having that ability to kind of look at what's out there and control where my data is going feels like it's very empowering as a consumer in a way that should make my financial institutions more comfortable with the connectivity that's happening overall.
Definitely. I think there's one additional concept that just triggered that I think is maybe important to highlight. And it's this concept of interoperability. And your kind of point about using a budgeting tool and then not use, like, that's a story a lot of folks have. I have that story as well. I've signed up for a bunch of it, but nothing actually ever like really hit.
Yeah.
Yeah. So all of these different tools, people are using upwards of 3 fintech applications at any given moment. Where I think it goes is this idea that, well, instead of having to use point solutions and then using this budgeting tool that sits out in the ether to then collect it over time, that we're going to move towards this world of connected and interoperable financial solutioning, where all of this stuff, no matter if it's provided by different providers, should be viewable in one place and be operational via one specific place, right? Like, that to me is the next stage in innovation that is going to overlay on top of everything that fintech has done, and is going to be absolutely facilitated by open banking, such that that budgeting tool that you might not have logged into is now embedded into that same experience, even though it's by a different provider, so that it all kind of operates in one mechanism. And maybe you'll start to see higher adoption of those sorts of tools.
Yeah, I think it'll be really interesting to see how banks leverage this capability, how fintech, I think Upstart, not that I want to make an Upstart commercial, but I think our approach is interesting in that we are not only a fintech that is consumer facing, but have the ability to embed our experiences inside the financial institution. So I think there's the ability for FIs to say, hey, we don't have to make it all, but because of open banking, interoperability, and technology capabilities, we can now embed the best of experiences. So we're providing consumers what they want. And I do think FIs have to choose between, am I going to try to be everything, which was the old model, right? Like, I'll be all the financial services this customer needs, and going, hey, I'm really good at these 5 things. So I'm going to do those 5 things, and I'm going to be connected to the ecosystem. So when my consumer wants something else, right, they can get it and they can use the data I have. They don't have to leave me to enable that experience. They can continue to work with me on the things I'm focused on being best at, and interoperate with the rest of the ecosystem and still have access to our financial information that's here in those experiences. I think it's a really powerful world that we're working towards.
And I think we've seen consumers actually looking at the financial institutions who are embracing this with a lot of love, that it's actually creating this incrementality around, hey, look, like, this actually is my primary institution. They're looking out for me. And I really love that. And so there's always going to be a place for banking, right? There's always a place for a lot of services that are going to be operational through a bank that can't happen through fintech. And so I think that the key is ensuring that as a financial institution that you are keeping pace with innovation rather than fighting against it. I think that's actually probably like a thematic thing that goes across all factors. But ensuring that that's the case, financial institutions that are participating in that, I think, are poised to be in a really good position as we continue to innovate and as things start to proceed over the next few years.
Well, that's two very immediate things. Is there anything else on the roadmap you wanted to share? Or is that all top secret under NDA?
Yeah, I mean, there's obviously a lot of things that we're working on at Plaid that are really exciting, and I look
Yeah,
forward
yeah.
to us launching at time. I will say, just to like kind of that final plug on this idea of multi-directional data access. We really believe that this is critically important, and that the concept we've actually coined for this is called universal data access, right? So
Hmm.
we want to enable consumer permission data sharing from all the places where consumers manage their money. And if you look at, like in Europe, the initial regulation around open banking was relatively narrow in scope in terms of saying, okay, information only flows from point A to point B and then can be
Hmm.
utilized. I think what we are really looking at as things are evolving is this idea that consumers' information sits in all aspects of the ether and should be able to go bidirectionally, and that the innovation should be able to happen across all of that data spectrum. And so our focus is actually on specifically enabling this multi-directional data access, which we think is somewhat unique in the ecosystem, in the way in which we've been able to do it. And of course, we've been able to build this really tremendous network of really awesome partners for us. But we think by doing that, we'll continue to unlock financial freedom for all and be able to provide differentiated data, which I think is the key to continue the innovation. And so, I think you'll see us continue to iterate on this idea of what universal data access means and continue to build products on top of that.
I love the bidirectional point. So for all the FIs listening, you need to start thinking about how you exist as a consumer and utilizer of data in the open banking environment, and not just a furnisher of data. That's where your leverage is, right? That's where you can act like a fintech and pick the, not everywhere, but pick the places to really take advantage of that. And I keep trying to tell FIs when I talk to them, you should view this as an opportunity, not just a threat. And figure out where the opportunities are for you here. Because I think there are many, especially if you start talking about bidirectional data and consumers having lots of different places they interact. You can really participate in that in a more rich way.
Totally agree.
All right, Raj. Well, I've got three questions I ask everybody in the podcast, so I'm going to throw them at you now, and you can answer however you like. But first, you've had an interesting career because I'm always curious how people get into finance. I don't think anybody grows up going, I'm going to be a banker. And you've kind of ended up both in the financial world and in the fintech world. So I'm curious. My first question is always, what's your best piece of career advice? And so you've got a lot of different, I guess, parts of your career from which to choose your best piece of advice.
Yeah. That's a great question. The best advice I ever received and that I try to provide to anyone on my team is this idea
Mm.
about own anything. It doesn't matter what is presented in front of you, even if it is the tiniest, smallest thing, own it and try to make it
Mm.
your own. Early on in my career, I had the opportunity to work on an initiative that effectively nobody wanted to touch at the institution. I'll redact the name right now, but basically it was a product that basically had gotten no traction, that was kind of being abandoned quickly by the engineers supporting it, by the product owners, by cross-functional people. It was kind of just hanging on by a thread. And I raised my hand because at that point I didn't have any P&L ownership. And I said, give it to me. Let me see what I can do with it. And I think that actually was the launch point for most of the success of my career. So I would just advocate for anyone who's kind of sitting there trying to figure out, hey, like, I don't want to do this thing because it sounds like it's not great. Like, just go own it. Make it your own, see what you can do.
Owning something, I like that. That's it's a first. I keep worrying that my career advices are going to overlap, and I feel like everybody's providing a new and different perspective. So that was great. Pick something and own it fully. All right. My second question is, what's the best piece of advice around the consumer banking or consumer lending space you've gotten? It seems like you're dispensing quite a bit, but I'm curious about the best advice you've gotten in that space.
Yeah, I think this will be pretty aligned with the theme that we've been talking about. But ultimately, for me, it's just enabling what consumers want is going to be the North Star that drives everything. So
Mm.
we get to talk to a lot of financial institutions, a lot of fintechs, and oftentimes like their roadmaps may not be directly aligned to what we think is right for consumers. But what we've seen time and time again is if you build to the most optimal solution for the consumer, regardless if you are the actual driver of that product, or if it's via partnership, or if it's via some sort of expansive tap into the ecosystem. That actually drives the hearts and minds of the consumers, which ultimately is the most important thing to sustain the growth of your business. So enable what consumers want.
It always reminds me that, I don't know if you ever saw this image, how Silicon Valley, like tech companies ship their org charts, and they've got the org charts for like Microsoft and Google and Apple and Amazon, and they end up like not shipping what the consumer wants, but shipping what their organization has built. And it's always a great reminder, like ultimately the consumer decides. And if you are focused on giving them what they want, then you got a good chance to be a winner. Not that those companies don't do great things, but you can see in all their products, their org chart. You can totally see it. So
Absolutely.
Consumer at the middle. Give the consumer what they want. And the last thing, give me what's one bold prediction for the future?
Yeah. I'm going to give you two.
Two, I like it. Two
One's
for
going
one.
to be one's going to be a little bit of a cheat because it's oriented around what we're currently doing, and it's really this idea that the future state for consumer financial services is going to be operating from one hub and spoke model, where everything, no matter what the provider is integrated in one place. And that I believe pretty firmly that this idea of open finance is actually a key driver into almost all of the new technologies that we're talking about and hearing about, from decentralized finance opportunities to existing open finance opportunities to connecting fintech to traditional finance and all of the above. And so I think that's going to be the way in which things move. The second bold prediction is I'm a huge University of Michigan Wolverines football fan. And so I'm going to predict that Jim Harbaugh stays with the University of Michigan rather than takes the Raiders head coaching job. And that will lead us to the promised land for 2 in a row over Ohio State.
2 in a row over Ohio State with Jim Harbaugh for the Michigan Wolverines.
Right.
You know, my CEO is a big Michigan Wolverines fan. Only doesn't root for Michigan if they end up ever playing Washington, because he's a little bit of a Washington fan. But you'll earn some points with our executive team being a Michigan fan. So I like it. Jim Harbaugh, and I'm a Stanford guy, so Harbaugh, you took him from us, but I think he's been a good coach. So I like that. It's a good prediction.
Well, he's the reason why I wear khaki pants, so it's perfect.
Didn't exactly invent them, but he certainly owns them, doesn't he?
Absolutely.
All right, Raja. I appreciate your joining us today. This was a lot of fun, and appreciate all your perspectives.
Thanks so much, Jeff. Love being here.